Well, hi there folks, it's Matt Hayson here, tracking everything that's happening in and around the Sydney property market this week. Well, last week, the auction clearance rate in Sydney collapsed. That's right, it produced the worst clearance rate since October 2022. Now, it was a long weekend and the volume was down to 798 properties, which was 50% fewer than the previous week, but it is a worrying trend line that's emerging as we move deeper into the spring selling cycle. The final clearance rate, wait for it, was sitting at just 43.5%. And we also expect now a second wave of new listings to come onto the market as school holidays wrap up. Already this week, we are seeing the volumes increase with 1,351 properties due to go under the hammer, and it appears very likely that we're going to see another sub 50% outcome. Now, when I look at such an auction clearance rate outcome, I see downward pressure on property prices unfolding. Also this week and around the market in general conversations, many sellers and buyers are continuing to say to us that they're not seeing much on the market. However, according to REA's PropTrack data, new listings in September hit a 10-year high. Our PropTrack director, Cameron Cusher, noted that while it's impossible to say why listings are so high, not cutting the rates has certainly been a major factor. He went on to say that a lot of people had been anticipating interest rate cuts this year. They've now likely been pushed out to next year. Maybe some people felt like they could hold on till late this year to sell, that is, but another 4 to 6 months is just a step too far. Now, we agree with Mr. Cush's assessment, and this is reinforced with the conversations we're currently having in lounge rooms at the moment. Now, speaking of interest rates, economist David Llewellyn-Smith, writing in Macro Business this week, has come out with a really bold forecast, and you've heard it here first, folks, that he suggested that the RBA is about to do an about-face and have to cut rates hard and fast. He noted it was a very simple explanation for the RBA's current stance that Australia's rates rose later than most comparable advanced economies. He also now is suggesting that it's taking longer to squeeze inflation than those countries who raise more aggressively. So now the RBA, of course, is just going to take longer to cut our rates here. But in David's view, this is just playing wrong. He goes on to say that Australia is a consumption-driven economy and we have the highest household debt in the world. Now, I'm just bringing up this graph here that you can see where we sit. It's pretty scary. This makes the Aussie economy uniquely sensitive to interest rates. Our floating mortgages tighten the screws on household disposable income much faster than elsewhere. In real terms, only Norway tighten more than Australia. As we all know now, though, Australia had a second wave of inflation. We've managed our power poorly. We've also opened the floodgates on immigration. As a result, our utility bills and the rents went absolutely nuts, but both now are in reverse and headline inflation is about to collapse. Now, David has suggested headline inflation is already well within the RBA's target band. We know that target band is 2 to 3%, and Aussie wages will get slashed below 3% in 2025. Now, we've never had a wage push inflation cycle, and pay growth is going to retrace. That's also pretty interesting. The Chinese stimulus path remains weak, and national income will be pressured in 2025 and worse in 2026. Now, the RBA probably won't cut by 50 points like they did in New Zealand this week, but regardless, the RBA is going to have to pivot and cut hard before Christmas. So that's big news, folks, hard before Christmas, and the RBA will also be forced to cut much deeper than other economies over the next 2 years. Now, this is a big forecast as we move deeper into spring. Now, do you agree with David's comments? I would certainly love to hear your thoughts on that. So that's a wrap for this week, folks. Wow, do we have some hot properties coming onto the market this week? It's a great buying environment, and our entire team looks forward to seeing you out and about. Thanks for watching, and I will catch you all next week.